Hi everyone, this is Matthew Kruse with Comstock Investments. I am filling in for Marlon Bowling, who is out this week. So today I have with me the pride and joy of Royal Iowa, Eric Relph, who's based in our main office in Northwest Iowa. Eric, how are you today?
Good. How's it going today, Matt?
Very good. Well, and before we begin, I want to remind everyone to like, share, subscribe this video. That is how we can get this information out to everyone, and you'll be the first to know if you subscribe to this video when we have a new episode. So, uh, maybe starting out here, kind of the rallies, potential rallies that we can see in kind of the May-June timeframe. And I guess I thought this was interesting to me. You tell me what you think of it, but basically, I feel like we're in kind of a critical period here, where in the next 60 days we need to kind of see something happening in the market. We've been waiting for some sort of rally to take place, and we've been disappointed since harvest. I think we were expecting some post-harvest rally. It didn't really happen. We were kind of expecting another rally, maybe post those January contracts that expired. It still hasn't really happened, and so now we're kind of. I did some research to see what was the average historical rally in the May-June timeframe, and the reason I chose that is I kind of feel like once we get past the acreage report at the end of June, we're going to already have a pretty good idea of what the crop is going to look like. And assuming that everything is looking okay, the crop got in, conditions are optimal. I think the market I think is going to look out and just see that there's just going to be more ending stocks added to our overall balance sheet at the end of the year. They're going to assume we're going to reach that trend line yield, which for corn, the USDA has us pegged at 181. And so if you kind of look at the average rally, this is from low to high, obviously, but there has been, reasons to be optimistic. In the lowest case scenario was in 2017. We saw a 35-cent rally. One of the years that comes to memory is 2019. That's when we had kind of a late planting, and we're maybe not at that point yet, but it's we got a little bit of boost in the markets this week because it looks large swaths of the Midwest where farmers are sitting idle, kind of waiting for things to dry out with all the rain that we've gotten. And in 2019, we saw the market jump almost $1.30 from low to high in that May-June timeframe. So I guess I throw that out there. Give me your feedback. What do you think about that and how it relates to what's going on right now?
Yeah, I don't think we're going to have the potential for that kind of a rally unless we continue in the short term, unless we continue to get these rains. Around here we've got situations that are pretty bad right now, but we're one good rain away from pretty bad turning into horrible. And you're getting into some prevent plant chatter and things of that nature if you get any more than what we already have here in Northwest Iowa. And that's not a real isolated area. You can go all the way up into central Minnesota, over into eastern Nebraska. Everybody saw the day that the tornadoes swathed through the Midwest, coming up all the way from Texas to South Dakota. So this could have that kind of potential if we continue to get these systems in the coming days. And then you're talking, you've missed your primary window, and how much are you trimming yield, and what does it mean to the bottom line on the carryout? So could we have a planting season rally that is meaningful enough to put in a marketing year high? Probably not. That would be dependent on switching that flip to a La Nina later in the summer, which I know you're talking through the June timeframe. That may not encompass enough time, but because it has been so delayed so far, some of the best climatologists in the business, including Eric Snodgrass, had made comments that we would already be switching from El Nino to La Nina prior to today, going back as early as last month in some cases, and we still haven't done that yet. So until we can make that switch, then I think you have the potential for a real aggressive rally. The problem is by then you've got people holding off on sales until the August timeframe, and most don't want to do that. They want to have something secure, some kind of a backstop in place. So it kind of becomes self-fulfilling to an extent, but it's definitely a double-edged sword that producers are going to have to figure out throughout this growing season, and it's not easy to do.
So we should not load the boat right at this point. There's
Well,
still,
right.
yeah, there's still time yet. This is that time of year people talk about, what happens to yields past a certain date, and I still think in that early May timeframe that yields hang on pretty good. It's
Sure.
really once you get past that May 15th date that the you should start to expect a yield loss, and I don't know if there's a set number, but you hear a lot of stuff thrown out, like maybe a bushel a day or half a bushel a day. You start losing in yield, maybe more than that. Um,
Right.
but it also varies too. It depends how the rest of the season goes. We saw that in 2019, where the market and everybody got all bulled up, and then really at the end of the day, we did obviously took the top end off of the yields, but overall the U.S. corn crop came out okay in 2019, and the market went back, I think, and retested its lows. So yeah, we don't want to get the cart ahead of the horse here, but
But reward the rally, right? That's
exactly.
I think one of the main takeaways here is you gotta do something, and this is the best spot we've had to do something in quite some time.
Yeah, I think if we see next week turns out to be like this week, I think you definitely need to start getting serious and pulling the trigger. And I think a lot of people are seeing the same music, right? And you're starting to get close to. We broke out of that 20-cent trading range. Let me pull it up here. We were been trading between 460 and 480 December corn for over 2 months now, right? And we finally
Yeah.
poke our head up above that, and so I think if you can, a lot of people I think have been wishing they could get back to $5 for quite a long time, and so I'm also concerned there's just gonna be a flush of sales made once we get to those levels, which is gonna kind of stimmy the tide a little bit in any eventual rally.
Well, and regionally, I would add too that even though we've seen this rally, we really haven't changed the cash price much. Basis has been shedding as we've been climbing higher here, and so in some cases it's been pretty extreme. But you've had widespread 5 to 20 cent basis losses, at least, like I said, regionally. I'm sure you can go out to Western Kansas, and that's definitely not the case, and they're just getting more money for the corn. But problem is out there the corn's not present, so then you have this geographic problem, which then again relies on basis to cure. But yeah, this could be the best opportunity we have until late summer. So for all of those that, whatever your rule of thumb is, by the time you're done planning, you want to have this much sold. By the 4th of July, you want to have this much sold. I think this is going to present that opportunity. And I'm of the mindset right now, unless something changes in the next few days, but my opinion right now is I want to have something done prior to Friday morning, because then we've got USDA reports coming out Friday.
And back talking about this weather again, I know it keeps some people out of the field, but you look at what's been happening with the drought map, and we have the latest one from April 30th. The drought footprint has been getting smaller, and so
Absolutely.
while it's maybe too much rain for some people, it's probably still welcome for others. I think that the eastern Iowa region was kind of the epicenter of that drought area, and I'm
Yeah.
sure this probably keeps them out of the field. But on the other hand, they've been begging for this rainfall for so long, and they might be needing it later in the year, because as you can already mention that the market is or the climatologists are all calling for a shift to La Nina maybe by August, and so we might be
Yep.
needing to pull in that subsoil moisture by then. But are you seeing
Absolutely.
any real crop damage yet? Any reports of that in that area? I know I talked to David Shively in Missouri, and they've gotten a ton of rain here, and they're talking about having to replant some of their beans. I don't know if you've seen any of
Yeah.
that.
Not yet, but again, that's kind of what I was alluding to earlier. You get in this area, and by this area I'm talking about from the Missouri River east to central Iowa, and from the central latitude of Iowa up into about the central latitude of Minnesota. That this region, you get one more inch plus rain in a widespread fashion, then you've got problems. Right now, I think we can still recover from it. We're having trouble shedding the water right now, and I know we've got some photos and stuff of that hopefully we can share along the way here. But we're having trouble shedding the water right now. But they are pulling some of the moisture that was forecasted for the next few days out of the forecast. So hopefully we can stay dry for a few days, shed this water. Then we've got pretty good conditions to come up, and it's a matter of what happens next week.
Well, let's talk about wheat a little bit. Um,
Mhm.
I'll take a little bit of a victory lap here. I caught some of that leg down in wheat starting last week when it topped out, and I got out Wednesday because it was looking like things were going to turn around here. So we pretty much
Yeah.
retraced uh, our weekly loss in wheat here, and we've
Yeah.
been looking for a move like that in a long time. Is are you calling a bottom here? What do you see going forward?
Yeah, I think we put the bottom behind us there on that last move. Then we come up. I can't remember now. So I apologize. I don't have my charts in front of me, but I think that July Chicago last week rallied like 93 or 95 cents, poked the 200-day moving average, then retreated to start the week. Finished off the highs last Friday, retreated to start the week. That's that leg you're talking about catching. Made an almost perfect 38% retracement of that sharp rally. Uh, Hits that supports, boom, shoots higher for 3 days straight, finish the week poking the 200-day moving average again. So it's been pretty impressive what it's been able to do from a technical nature, especially when you consider the SRW wheat really doesn't have the condition problems that the HRW does, particularly out in Western Kansas and the Panhandle region. You had mentioned some people needing the rain and wanting the rain. I thought it was interesting when I was talking to clients and then kind of looking at some rainfall totals over the past month. Dodge City, Kansas has had 2/100ths of rain, and they're right in the heart of Kansas City HRW wheat. 2/100ths in a month, while Fort Scott, Kansas, on the far eastern edge of Kansas, right up against the Missouri border, had over 20 inches in that same time frame. So it's definitely a tale of two halves. There's going to be haves and have-nots, and unfortunately, out where the cattle are centralized, they're having trouble. So, but yeah, back to your point with the wheat, and because of that, and then this week, not only did the Chicago do it, the KC was able to do the same thing and went right up, poked the 200-day moving average, finished slightly off of that. So I would expect to see some kind of technical retracement, pullback again before we can mount another rally. But I think you look back at the lows from a few weeks back, those should hold in place, and I think we can move from there.
Let's maybe talk about the cattle this week. I mean, they were tremendous volatility. They were all over the place, but they still
Yeah.
ended up bouncing off quite a bit off of their low. So I
Hmm.
guess that's a good thing. And what do you chalk up that volatility to? Is just a lot of the headlines surrounding the avian flu still.
Yeah.
What do you see there?
Yeah, definitely. Avian flu centralized. To start the week, we were hearing that the USDA was going to start testing beef at the retail level, particularly hamburger, because hamburger is ground with beef on dairy, and some of the Holstein meat gets crossed in there to make the hamburger. And so that's one of the primary locations that we could see beef coming from dairy cattle that went to slaughter. So that's where they started their testing. So the fact that they were going to start testing put pressure on the market because, like with anything, the harder you look, the more likely you are to find, right? And so that was what put us under pressure to start the week. We had two vicious down days on Tuesday, Wednesday. And then Wednesday after the close, late Wednesday, we heard that the USDA had randomly sampled in different locations 30 hamburger samples. All of them were negative. And so that gave us enough impetus to push the market sharply higher on Thursday. And then today we were just kind of mixed in the week. I think you were trying to figure out if you wanted to have some exposure going into the weekend or not, with the potential of more headlines coming out. But it was all centered around those headlines. I would add that the fundamentals stayed fairly supportive. Feeder cattle cash suffered a little bit, but live cattle actually put on $1 to $2 depending on where you're at in the country. Cash cattle are looking really impressive when you've got a June board in the 70s and cash trade at 187 in Iowa, 185 to 186 in the Southern Plains. So there's still plenty of room for this thing to rally based on the cash price versus that front month June live cattle board. Just have to see how it plays out.
One of the other impetuses for this rally is some of this talk about what we're seeing in South America, that the soybean harvest in Brazil is nearing its end. It's over 90% complete at this point, but the last remaining state, principal producing state to be harvested is in Rio Grande do Sul, and it just so happens that they're experiencing record flooding getting, something like 20 inches in the last couple of weeks, and they're expected to get another 10 plus inches here going forward in the next week. And so there's already been loss of life, there's been property damage, and of course we're seeing some videos of combines, going through standing water trying to get the crop out. At a minimum, you would think it would be causing some quality issues, but there's been estimates from as little as 1 million metric ton loss to as many as 5 million metric ton loss. And so if you use USDA's number of 155, maybe you're shaving off a couple percent of the crop size there. It's kind of interesting to me that for all this time I've been hearing about the crop damage in Brazil and the drought, and the market just hasn't seemed to care all this time. And we get to the very tail
You,
end,
you
and
flood out the last 40% of Rio Grande do Sul, and yeah.
the market is kind of, disconsidered the crop at this point. They've moved on. And,
No.
and yet, right at the tail end, you get all this flooding, and now everyone seems to care about the potential crop losses that are there. Do you have anything to add to that, or what?
Yeah, I've kind of alluded to this with you privately in the past, and I think it's worth throwing out in the public eye. I think Americans have a misconception that Brazil is something like Rhode Island, or maybe you could take it a step further and say Honduras or something of that nature from a geographical scale. And they think in their minds that it's much smaller than what it is, and so I think people lose sight of the fact that you can have a really good situation in Mato Grosso, which is very important, and a really bad situation in Mato Grosso do Sul, Rio Grande do Sul, and Paraná, and that matters just as much, only they don't realize it because all they ever hear about is Mato Grosso. And so I think there's a little geography lesson in here, but their growing season is so long, and you've talked about that numerous times, to think that they've been done planting corn in Mato Grosso for how long now, in a lot of areas of Mato Grosso, and they're still trying to harvest beans in Rio Grande do Sul, and there's still 40% of the crop out in the field, if I'm not mistaken, something like that, and they produce 17% of the soybeans in the country. So there's a large chunk out there that's still at risk. And I think, to your point, I think it's kind of funny. You have a drought all year long and nobody cares, but then you flood the final state that's down to its last 40%, and all of a sudden we kind of have a market reaction here. And the other thing is this is the first year in 4 years that Argentina has seemed to matter to U.S. trade. We didn't care when they were in a 3-year straight drought cycle, but now that they're going to make a crop, now they matter again. And so that's something else that's weighing in here. And you've got the Buenos Aires Grains Exchange significantly reducing their estimates for Argentina, as well as significant reductions in southern Brazil production. So there's still a lot to play out here. And I think that's having as much impact as the U.S. weather is, even though the U.S. weather is what we see day to day and would naturally think, oh, that's why. But maybe not from a bigger scale.
Yeah, I don't think the market would care in previous years about a 1 or 2 million metric ton loss at the tail end of the crop. But take it in the context that there's these record production estimate gaps between the USDA and CONAB, where there's a lot of people, and myself included, that are highly skeptical of what the USDA is coming out with. And it seems there's a lot of expectation or pressure for the USDA to make those cuts. And they've been resistant up until this point. And now you're adding on more bad news. It's getting to the point where people are going to riot in the streets if they don't make some cuts here soon, because they've, at least the last 2, if not 3 reports, that the average trade expectation in the WASA report was for, multiple million metric ton cut, and it has not happened. And so, right. and now they're seeing even further damage on top of this, and it's like, come on, what's going on? And even in the case of corn estimates, overall Argentina still is going to have a good crop, but they've lost something like 10 million metric tons from their early season projections to now. It's just, right. It ain't over till it's over. And that's what you're seeing. There's people in Rio Grande do Sul that were having a great crop, and they're on the home stretch. They had half the the crop harvested, and then this happens. And so
Yeah.
you just never know. It ain't over till it's over, and they're just getting clipped here pretty bad at the end. And I think the market is kind of sick and tired of waiting for the USDA to wake up and make an adjustment lower.
Yeah, they're going to have to wear fire retardant suits if they stick to trend line on U.S. production and don't make reductions in South America again this month. I think they're going to have some trouble on their hands.
Well, Eric, I want to thank you for joining us. Is there anything else that you want to share with us as we wrap up and head into the weekend?
Not really. I think we need to see some life out of some of these bigger commodity sectors when we look at the energy markets and metals, if we're going to attract some outside money to the long side of some of the other ag commodities. But I guess we'll be satisfied if we continue to have trouble and see fund liquidation in the grain sector for the bulk of our listeners. That's what matters most. So we'll see how it goes.
Yeah, that's the other thing that we need to happen is we need something that's going to scare these funds out of their short positions. And it just hasn't happened until now. And I'm not sure what it's going to take, if it's going to take another weather event like what's happening in Brazil or more rain in the Midwest to a late planting. But, even when we had a lower than expectation of, planting 90 million acres of corn, the market rallied pretty hard for a day. And then in, the next week it settled back down. So it just wasn't enough to scare the funds out of their short positions. And so we need to take their foot off the neck of the, of the bulls here if we're going to have any chance of maintaining this rally.
Exactly. Yep.
All right. Well, thank you, Eric. And everyone have a good weekend, and we'll catch you next week.
Good weekend.
Thanks for joining us on our Comstock YouTube channel. Don't forget you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.